bias chart. So Tim, first time guest on Face. Welcome to our community. Waiting
Hi,
to get your.
Dale.
Hey Tim, how are you? Nice to meet you.
Yeah, good. Nice to be here, mate. Nice to be here.
Okay, so I could tell you're not from the U.S.
No, definitely not.
Okay, so
Definitely UK.
all right, Tim. So have you been in Zoom before? You want to share your screen?
Yeah, let's do that now. Hang on.
That's that little green box down there, Tim. Macrodesiac.
Yeah, Macrodesiac. That's
Macrodesiac. Okay, why that handle? Macro kind of puts you in a state of nirvana.
yeah.
Huh?
It's a guy who I sort of met online a couple of years ago. A guy called David Bell. He actually started Macrodesiac, and
Oh,
I
okay.
joined as a member. It was his idea to sort of to try and help people understand sort of the macro side of trading, which I
Yeah.
think a lot of people a lot of retail traders especially they try and ignore. Um,
So you're starting off here with the daily. Macro to me means weekly, monthly looks at things as well. So you teach people to use a telescope rather than just looking at the markets through a microscope.
Absolutely, absolutely, and not just from a technical perspective as well. You know, you can often pick up information, you know, on a much lower time frame of what the market's looking at. You know, in terms of how they react to a certain data point, or just ignore a certain data point completely.
Okay.
You know, particularly if you think about inflation at the moment. You know, everyone's getting very worked up about inflation, but there's not really much sign of it just yet.
Let me ask you this before we get to the markets. Can you tell us a little bit about your journey and how you got involved in the markets? Did you have mentors, or were there any books that were very influential, or are you pretty much self-taught?
Yeah, I think for me it's a mix of all of that. My sort of journey, if you like, in trading, or even a bit further back, I moved to Spain. Actually, I'm in Spain now,
Okay.
from the UK, nearly 19 years ago.
Okay.
I started working as an estate agent, started working in property here, helping people find homes over here and everything. But over time, it lost its appeal, lost there wasn't much of a challenge, you know, and a guy that worked in the office next door mentioned the markets to me, as often happens, you know, and everyone says, "Oh, it's
Yeah.
a nice, easy way to make a bit of money on the side." You know, I think we've all heard that.
Nice, easy way.
That's it. Yeah, that's the one.
Yeah, it's a piece of cake. All you have to
Yeah,
do is, yeah, okay.
I
Yeah,
think that's how we all
you
get
could
involved, isn't
work
it?
and you could
Yeah,
work. I remember people saying, well, you could work and just, spend 15 minutes when you come home from work and open your platform and just, make a few $100 and then go have dinner.
yeah, that's exactly
Very
that's the
very
dream.
realistic.
Yeah,
Yeah.
the dream
Okay.
we were all sold.
Yeah.
So obviously I started out like that, and really this was back in 2016, so it was quite the year as well to start paying attention to the markets. You know, when I saw the Brexit vote, and I saw some people talking about how much money they'd made, and how they sort of called the vote, you know, and going into sort of deeper analysis of it and everything, and that really sort of grabbed my attention. You know, there was twice that year that I was extremely wrong about Brexit and about Trump being bad for the markets.
Yeah.
And that really was what drove my interest from there onwards, and to look at things sort of from a wider perspective as well, rather than just looking at sort of technicals and everything, because you know there are ways to get ahead of the market, or at least attempt to get ahead of the market and assess the risk more. Sort of more carefully, if you like, sort of in advance of perhaps the move happening, and maybe take a position before the technicals are screaming, do this. You know, you've got the sort of the wider view that you can look at and consider,
Yeah.
okay, has this, you know, are we ready now? Is it worth taking a small position and then trying to scale into this?
So you have a narrative, and that narrative gives you a bias, and then you wait for something technical, chart-wise, to confirm those ideas, or at least to probe it.
Exactly. Yeah, you try and take the position ahead of the price. You know, the price confirming. You know, it takes a bit of. You know, you've got to sort of. It's a bit ballsy sometimes, and obviously it doesn't work quite often. So you have to start small. Um,
Okay.
So I mean, there was let's think about the sort of the narratives of the last year that we've kind of looked at, for example, and it's important often as well to sort of look at when the data doesn't match up to the narrative, the same as when the price doesn't match up to the narrative as well. That's where some of the best opportunities come, is where everyone's talking about perhaps the top in the S&P might be a really good example of that you touched on earlier. Everyone's talking about there being a top in the S&P, but you look at what we've still got. Nasdaq's had a good pullback. Obviously, the big tech in there are heavily weighted for the S&P. So I still think we grind a bit more, to be honest. I think those, as they've often been, I think those calls for a top are going to be a bit premature. Okay. But I do think we're due a correction at some point. I just don't think it's yet. I think we've got some positive earnings surprises and things to go ahead and get through all of that, the positive data first.
Okay, so you talked about people getting a little all bulled up about inflation, commodity super cycles, that you really haven't seen it yet. And now we're looking at gold charts. So really has been, I don't know, correcting a long-term uptrend, but a little shorter term. Do you need closes back over 1764 to confirm it? Because to me, it still looks like it could go either way. And actually, my preferred count is for us to take out that double bottom and wash out one more time. What do you think?
I'm with you there. I'm exactly the same.
But we also know where we're wrong, right? If we start closing back over that breakdown, you probably want to get out of the way.
Absolutely. Now, I think this is again where something that I didn't pay much attention to at all at the beginning is obviously yields, and especially the real yields, inflation adjusted yields, which when you're looking at gold, is so important. And you've seen, I actually had another chart there. How do I move this down?
Just switch charts. If it's on the same screen, it'll change.
No, it's in a tab underneath, actually. If I can just bring this down a bit, Okay, so I had it over here. Yeah, there we go. All right, just give that a chance to catch up.
Okay, yield. Got it. Yeah. Got your yield chart up there.
That's it. So obviously we've seen that they've, ever since we bottomed out down here, okay, back in August. Okay, so I think what I've done here, sorry, just to explain, I've inverted the gold side of things. Okay, so obviously as the US 10-year yield has increased, gold has been going down in value ever since this sort of August. But recently we've seen that divergence again, and this, I like to talk about the jaws, which way are we going to close into this? Is it going to be a case that the yields are going to continue lower, or is gold going to continue lower? Which way are we going to go? And I still think that we've got a little bit further to go in yields after a bit of a pullback now. I think a bit of consolidation is probably in order for the time being, but I still think we're going to get, even though everyone's expecting the inflation and talking about it being transit, well, I don't know if everyone is, but I think there's perhaps a bit more of a consensus on that side that, certainly the Fed think it's going to be transitory, and I would tend to agree with them.
Okay. So with your outlook on gold, does a dollar play a factor in it? We've been pulling back in the dollar from last week's high. Does that mean that the dollar may reassert itself? Cable had a pretty lousy week. It topped a few weeks ago, and Euro Pound had a good week. So do you think that we could see another push up in the dollar that might be the catalyst for another decline in metals?
I do, I do, and I think perhaps we'll see that in the yields as well. The dollar and yields have been quite correlated of late. So I'm still bullish the dollar. I think obviously we've had a decent move. We've now pulled back a bit, but just resetting really. I think before another move higher in the dollar. Okay. I'm not keen on selling dollars at the moment at all. Okay.
Any other instruments that you wanted to talk about with us today, Tim?
Yeah, I mean, if you look at the euro here as well, I think Blake actually touched on this just in the preview as well. The level that we've moved back into there is obviously, again, looking at the daily chart and the 200-day moving average here as well. That again, it's a nice, easy sort of flip point that we can see, where the risk reward is possibly favoring that. Now with the euro, I'm on the fence at the moment. I'm not a fan of the euro. I think the way the European Union have handled the pandemic has been pretty terrible in terms of the vaccination rollout, the delays in the recovery fund. And I think that potentially, we see the euro and the eurozone suffer for longer economically because of it, perhaps more so than people are expecting at the moment. But obviously, it's a relative game. It's a relative game.
Are you hearing any kind of narratives about, there's this guy I've interviewed quite a few times who talked about that there could be some type of crisis coming out of Italy, and he actually last year said April was a time frame. Are you hearing any rumblings about new issues with Italy and the European Union?
I wouldn't say new issues. My model, if you like, for how the EU and the eurozone work is that they are constantly in crisis of varying degrees. There's not, unless we see a real fiscal union and we see it actually become a genuine union rather than a kind of a dysfunctional one, then I just can't see how we ever get out of that, if you like. There's the German court case that's going on at the moment as well, which, it's probably not going to go anywhere, but it's just another delay. It's just another seed of discontent within the eurozone, and sort of there's been a lot of talk about a two-tier version of the eurozone as well. But it's just nothing's ever resolved with the euro, with the eurozone and therefore the euro. It just doesn't.
So are you a sub-parity guy?
I mean, who knows? It's always a relative game, Dale, as you know.
Yeah,
you've got to take it as it comes and see how things compare to the other assets, because obviously there's all sorts that can happen with the dollar in the meantime as well. The Fed have made clear what they're planning to do for the time being. But obviously markets can go one way or another. The Fed have got to act, and that can have another sort of domino effect as well. So, whilst I try and build a picture further out with the macro side of things, I think it's important not to get too married to that longer term view. It's kind of a constantly updating forecast that you're trying to build, or at least that's how I see it. And then you're waiting for things to come into play and how they're going to interact with each other, and especially what the second order consequences are going to be, because I think most of the time the immediate consequences are obvious to anyone that's involved in the markets. But you need to try and be looking at, okay, well, what are the things that other people aren't seeing yet that I can try and get ahead of, and and wait for that to and wait and see if that confirms. Because obviously the best opportunities are when everyone's caught the wrong way.
Yes, always. That's why breakout failures are some of the best trades, and predominantly Head and Shoulders do that. So any feel on commodity currencies as well in here, Tim? Canada, Aussie, Canada, a little bit of a correlation to the energy complex. What else have you brought for us?
Yeah, I mean, I've been bullish commodities since last year, really, when sort of that June last year, really noticed that there was going to be a big push on it, and I think a lot depends on the infrastructure bill now in the US. I think that's going to be a driving factor. China perhaps are not going to lead the way like they did. Obviously China have been massive commodity buyers all throughout this year in particular, but they're sort of trying to slow that credit impulse down now, and sort of rein in their spending a bit. So it makes a lot of sense to me, but at the same time, there's a lot of things that aren't confirming it at the moment.
Like
we've already seen a lot. I mean, if you take copper for example, it rallied from 2.5, and we're now over 4, and you think, well, okay, yes, there should be continual demand for copper, but how much of this current pricing is also down to the supply chain
issues,
disruption? Yeah, that's put a massive.
Takes a long time to get a copper mine online.
Yeah,
I think like 10 years or something, right, Tom?
10? Yeah, I think it is about that, and a lot of the machinery that has to be brought in for it as well. There's delays, and I don't see any reason why commodities shouldn't, shouldn't push higher over the long term. I don't see any reason why, from the current pricing and everything else, we're gonna need more stuff, especially in copper, for all of this electric future that we're aiming for. But yeah, I don't see it as a kind of as a runaway thing.
Okay, I've had a few guys on that've been real right about uranium.
Yeah.
That's another way for us to, I mean, they could blow up and irradiate the world, but it is clean energy if you take out the potential for an accident. So uranium, some of the people I've talked to say it's in its infancy for a bull run.
Yeah, I don't know about the infancy. I think the infancy we saw a couple of years ago. We actually in Macrodesiac talked about this as Cameco being the best play really, because the sort of uranium ETFs weren't really they didn't really have any liquidity or any volume in them, and obviously that's
a
done.
lot of them do. Yeah.
So Cameco's done pretty well. But I think now again we need to, the governments really need to get behind nuclear more than they currently are to sort of push us on for the next level. It's starting, and I think it's inevitable. I don't see how else they're going to create the levels of energy that we need. It's sort of clean energy that we need, and replace fossil fuels, especially in the timeframes they're talking about, unless they're going to include nuclear in that as a much larger share than it currently is.
Okay, I this is a little bit off topic on individual instruments, but you appear to be a thinker, and putting together the whole jigsaw puzzle. A lot of new presidents early on in their term, Tim, are tested by adversarial forces, and there's quite a few things bubbling on the stove right now. Russia. In China, especially Russia, because President Biden's telegraphed that there's going to be retaliation for some of the misdeeds of Russia. And I'm wondering if you think that there's some geo risk out there, that we're so used to all of these things never turning into anything, that it just seems like bluster. But I'm a little concerned about some type of test of Biden by possibly Russia, called Putin a killer. Sticks and stones will break my bones, but names will never hurt me. Well, it bothered Putin. And, all the hacking and the election. Do you think that there's a possibility? I saw pictures of tanks rolling into Ukraine, like major amount of buildup of the army in Ukraine. Do you think that Putin is going to test President Biden here in the next couple months? What's a European viewpoint of what's happening with a new administration here and the geo scene?
Yeah, I think it's definitely, you're spot on with the testing. I think that's already happening. I think they're already trying to establish maybe new boundaries, shall we say, for engagement and so on. But I still, I've been thinking about it with Russia and with China. And I mean, no one did anything when Russia went into Crimea, did they? There was no real consequence to that. In terms of in terms of markets, in terms of a real risk-off sentiment. Oh my God, this has happened. It's changed everything. And again with China, I think the costs of a real conflict are perhaps too high for everyone involved.
Yes.
And especially coming out of where we are now, and I think it's something that's just going to continually rumble along in the background, probably for a while longer. At some point there might be a flashpoint, but I think perhaps we're just going to see more of this economic, the Cold War decoupling that we're seeing now.
Yeah.
Russia's relations with the US haven't been good for obviously quite a long time. They keep interfering with the Nord Stream as well, Nord Stream 2, which Russia aren't overly happy about. But in the end, everyone's interests they seem to just about get aligned enough that there's a major conflict is always avoided.
Okay. Any other markets you want to discuss with the community today, Tim?
I mean, Euro pound. We've obviously we saw the potential for the vaccine trade earlier in the year, the sort of the relative vaccine trade. Yeah. Obviously we've seen euro pound has just gone right down from this 90 level up here. But yeah,
this week we got a weekly reversal to the upside. I think maybe we could rally back to the breakdown. Looks like on your chart about 8.5.
I don't know.
Tough call.
I don't know. Yeah, it's a tough call. I don't know if we'll get that far.
Okay.
Like I say, I've still got a fairly bearish bias on the euro, and I'm pretty bullish the pound overall as well. I think the UK's been battered down a lot with Brexit, and the recent things, the recent move in the pound, I think has probably been a bit more positioning and it's sort of just a bit of a washout than anything fundamentally changing. I still think the UK is far better positioned to weather the economic side of this far better than the Eurozone. I think the economy actually coming out the other side of this will be a lot better. And I like the super deduction as well that the Chancellor put in from the UK, encouraging investment. So it's basically a 130% deduction if you make investments in assets, basically for your business in the UK. Then you can get a massive deduction on your taxes, which will incentivize investment. Will incentivize investments in energy as well, particularly over there. So I see that as alongside the general sort of economic climate there as quite a positive driver for the UK going forward. And I still think there's people that believe that Brexit's going to be a disaster for the UK, and I still don't think that it's going to be anything like as bad as it hasn't been continually so far, but people still seem to hang on to that narrative that it's bad.
Yeah, I mean, according to EG, it's become the safe haven currency in Europe.
Yeah, I guess so. Huh? I guess so. Yeah, I like that.
Yeah.
Like that. Anyway, they were talking about it being an emerging market currency about a year ago, weren't they?
Yeah, and now it's become the flight to quality out of Europe to the UK.
Exactly.
Okay. How do you like living in Spain?
Oh, it's great. Yeah, it's great. I love it. Love it over here. Yeah.
You never want to go back to the UK?
No, I mean, it's still, no, not really. There's nothing that would really take me there. I've got my family here. My kids were born here. They're growing up here. They go to Spanish school.
All right.
So yeah, my life is here now, Dale. I've literally lived half my life here now. So
okay. Are you near the ocean?
Yeah, just 10 minutes back from the Med. Down in the south of Spain. So
is the cost of living still less in the UK and the US, or has that changed?
No, it's still much lower. And where I am as well, property's relatively cheap as well. You could still buy a villa by the coast here for sort of 400,000 euros, something like that. Which obviously a lot of places, you've got to go a lot bigger.
I'm in San Diego; it'd be 10 times as much.
Yeah.
Well, yeah. You know what happens when you survive an interview with Dale Pinkert on F.A.C.E? Are you ready?
Go on, go on, tell me.
It's a life-changing event. You're crossing the Rubicon.
Okay, I'm ready.
All right, can you take it now? I bet our attendees know what I'm going to say. You are now my trading warrior brother, Tim.
Likewise, likewise.
It's like the mafia. Once you become my trading warrior brother,
well, I'm a made man.
You are. You're a made man. I'm so glad that you got back in touch with me, and we got to talk to each other. And I want to wish you all the best in your efforts in the market, and really appreciate you giving us some time, because that's our most valuable currency, for you to come in here and share a little bit about your journey and some of your views on the market. So much appreciated, Tim. And
Thanks,
what's the best way for people that you could get whacked now, Sansy's saying. So I've been watching The Godfather on TV. Anyway, so what's the best way besides your Twitter handle for people to find you and follow your work?
They can email me at tim@macrodesiac.com, or just come in here to macrodesiac.com. We're always publishing things here.
Yeah, I saw that.
Yeah, we try and keep it light, have a bit of fun with it as well, rather than the real formal stuff that people tend to find in financial writing, especially. But obviously it is more than just looking at the technicals and looking at the charts. We're really trying to dig down into what's going on under the surface in a way that your everyday person understands.
It says you have 5,000 people reading this.
Yeah, we do.
Okay.
Yeah, it's good, and we want to build that to more as well.
Okay. So there you go, everyone, how you can follow Tim. You said you have partners, so there's probably a couple of, you're not doing all the writing, are you?
No, not at all. David Bell as well. Okay,
I've seen David on Twitter quite a bit over the years. Say hello to him for us, and this is
I will do.
Tell David that here's your commercial. And
Thank you.
thank you so much, Tim. It's a pleasure meeting you, and let's do this again down the road. Why don't you think about this? Maybe you and David could come on together, and we could see a team approach on the next interview. What do you think?
I like that. I'll have a chat with him. Yeah, definitely.
Okay. All right. So thanks again, Tim. Remember, don't just count your euros, your cable, count your blessings, and we'll see everyone to wrap up the week on Friday. I have Fox Business News contributor Charlie Gasparino and reporter for the New York Post. We're going to bat it around a little bit tomorrow. Good hunting the rest of the day, and in 15 minutes, go join Blake and the team for the Morning Edge. Thanks again, Tim. Appreciate it.
Thanks, Dale. Been a pleasure.
Okay, everyone, adios. Good hunting the rest of the day. You're welcome, Monica, Alexander, and people are saying thank you to you, Tim.
Thanks, guys. Thank you.
All right, that's a wrap. I'll see everyone tomorrow to end the week.